Hello Theta Gang, it's Mikey Millions here, and after many long months, I am proud to introduce the next episode of the Dankest Trades series. And good news for the fans, I've decided to make this series more frequently since you guys are always screaming for it. Now, let's crack this one open. Over the past several months in late summer and early fall, the United States economy struggled to find its footing as new COVID infections remained stagnant in previously hard-hit areas like New York and New Jersey. Meanwhile, Mama Rona ran train through the Midwest and Deep South, so much that college seniors had to play football in front of cardboard cutouts instead of actual fans. This mix created turmoil in the US, as certain parts of the country largely went back to business as usual, while other communities canceled Halloween and parents couldn't even kick their kids out of the house to go to school. Unsurprisingly, such varied results in economic recovery as coronavirus made its rounds led to a choppy stock market that many have come to call the kangaroo market. Although the kangaroo market has certainly led to some headaches, the clowns at WallStreetBets never let volatility go to waste. With the US economy slowly reopening, there has been no shortage of opportunity for those willing to roll the dice. Gentlemen, it is my pleasure to present the freshest trades of the reopening. We're kicking off fresh trade number 5 with a typical story of excellent WallStreetBets risk management. Like so many other hardworking Americans this year, our homie Like a Bulls lost his job manufacturing custom dog bowls due to poor job performance amid the pandemic. With expenses mounting and Congress's enhanced unemployment benefits due to expire within weeks of his firing, Like a Bulls recognized how dire his situation was. Demand for custom dog bowls was minimal, and the prospect of finding a new job sanding porcelain during the recession was remote. If Like a Bulls could not turn things around quickly, he would soon be stuck begging for scraps in Ramenistan. As high as the stakes were, there was no room for error. In late August, Like a Bulls sprang into action with great avarice by transferring his entire $51,000 401k to a TD Ameritrade Roth account to trade futures. Despite having no experience in the matter, our homie went in. On Wednesday, August 26th at market open, he took his whole $51,000 stack and dumped it into SPX unlubricated, with the position expiring the same day, a maneuver that wouldn't even be allowed on Robinhood. Although raw dogging the straight up index is far too risky for the typical unemployed dog bowl manufacturer, Like a Bulls was a special breed. That day, banks got rocked by the pandemic, 1 million people filed for unemployment, and oil companies were so weak that Exxon got kicked off the Dow. Literally any other year in the history of the market, this would have all been terrible, terrible news. But in 2020, it is opposite day every day, and this 3-punch combo sent stocks soaring to a record high. Within hours, the S&P reached never-before-seen levels, and Like a Bulls was sitting on a 6-figure gain. By the end of the day, with his phone barely clinging to life, our man marveled at his $321,000 account, an overall gain of more than $250,000 in less than a day. And depending on how the trades closed, he might have even pulled a bit more than that. Other users pointed out that Like a Bulls is still screwed despite his big win, because you have to pay tax plus a 10% penalty if you withdraw from your Roth before you're 59.5 years old. But it appears coronavirus worked in Like a Bulls' favor, as the government temporarily allows people to access their IRAs without penalty if they need COVID relief. Being an unemployed blue-collar worker, COVID relief from his IRA is exactly what Like a Bulls needs. Congrats on making more money in a few hours of trading than you would have in years of dog bowl painting, Leica. Now, let's check out fresh trade number 4. Our next fresh trader is a character of true modesty who operates under the moniker Greenish Day. Although the account is over a year old, he lurked for at least 10 months before ever posting a single thing. A true lurker, our man awaited his shining moment before making his first post. True to form, Greenish Day performed extensive and introverted due diligence in the month of August. Having quietly evaluated the market for weeks, he determined that Immune Therapeutics, ticker AIMT, was destined to have a greenish day before September 19th. On Tuesday, August 25th, Homie dropped his last $2,232 specifically into AIMT calls at the $25 strike with expiration set for September. At the time of purchase, AIMT was trading for about $12.50, and these calls were about 100% out of the money. Greenish Day needed AIMT to double in less than 3 weeks, or this rent money would be toast. But by a massive stroke of luck, or perhaps with the assistance of a crystal ball, AIMT shot up that very next Monday on the announcement that Nestle, yes, the same Nestle that makes chocolate bars, would buy this upstart pharmaceutical company for $34.50 a share. Immediately, the stock reacted bigly, and Greenish Day's calls were now deep in the money. His approximately $2,200 investment multiplied itself almost 25 times over into a claimed $54,000. It appears Greenish Day must have sold about half of his contracts prior to posting, but nonetheless, this gain was ginormous. On the daily, his percentage gain was over 96,000%, narrowly missing the high score for percentage gain of all time. Now, who is this hustler? We don't know. His past is shrouded in mystery, and it appears he went dark again after posting this trade as if to keep it in a non-attributable manner, almost certainly with NordVPN to cover his tracks. Some might speculate that he's trying to avoid an estranged father asking him for money, or an ex-wife trying to get child support. Perhaps more likely, other WSBers have speculated that a trade timed like this can only be achieved with the assistance of insider info, and this low internet footprint is keeping the SEC off his tracks. You gotta love a good ghost story. Congratulations on the Greenish Day, Greenish Day. Now, let's check out fresh trade number 3. During the coronavirus pandemic, more people than ever began working from home in their bathrobes instead of going into the office. This shift to telework led to unprecedented demand for cloud computing software, content delivery, and network protection, as a never-before-seen number of employees had their company conference calls open on one monitor and Among Us on the other. Although many tech companies cashed in on this digital gold rush, one of the freshest but most low-key companies came in with hefty chunks. An extra nerdy company called Fastly multiplied over 5 times in value between May and July before spending the rest of the summer in a sideways channel. It was in early fall that a 19-year-old madman by the name of Friendly Quips decided enough was enough. It was time to get his hands dirty and take his piece of the pie. Friendly Quips had had a controversial track record so far, and by that, I mean he started investing in July and managed to lose 13 grand during the most bullish months of the market ever in life. Despite his ineptitude, his confidence never waned. On October 6th, our man rubbed both his brain cells together and determined that Fastly was doomed to fall massively within the next 10 days. With no regard for risk, Friendly Quips dropped about $4,000 into Fastly puts at the $100 strike, expiring on October 16th. When he opened the position, Fastly was trading for just a hair over $100, but over the next week, Fastly rose sharply higher to a high of 136. It appeared Friendly Quips would maintain his streak of abject failure, and by October 14th, with 2 days to expiration, our man's puts were down 95% with no bid. Stressed out but still clinging, Friendly Quips went through some reflection. After several hours of self-realization, he determined his only problem was that he bought the puts too early. With expiration looming, Homeboy dropped his literal last $200 on 200 more puts at the same $100 strike. At the time, that target was over 20% out of the money. That very night, news broke that Fastly's partnership with TikTok was going sour, and the company lowered its guidance to $5 million below analyst expectations. The stock was absolutely jackhammered, suffering a massive red dildo that shaved 30% off the company's share price. By market open on October 15th, Friendly Quips' almost worthless puts had skyrocketed nearly 150,000% from $1 up to $14.90 a pop. This level of vindication is breathtaking, and we can only imagine the sensations he felt as he closed out his $382,000 gain live for our amusement. With his nerves rampant, our man recruited his half-cyborg friend Moonman to post to WallStreetBets on his behalf. According to Moonman, Friendly Quips plans on using the loot to buy a house on Mount Olympus and will leave just enough cash in Robinhood to play the FD lottery once again. Congratulations on getting your life on track, friendly quips. Now, let's check out fresh trade number 2. Our next fresh trader is a man who easily has the heaviest set of balls the market has ever seen. Born an impoverished peasant, Hurley 53017 began his journey with a mere $800. After working hard selling invites to some Pirate Bay knockoff website called Sagosa and following the advice from the R-Investing subreddit for like 2 years, Hurley managed to bring his account to $3,000, a rate of return which clearly would not satisfy a man with an appetite for gains. Poking around for a better way to earn some loot, our man discovered WallStreetBets in early 2020 and never looked back. In January, Hurley took on his first YOLO, dropping his entire $3,000 portfolio into Tesla calls to play earnings. And if any of you remember that Q4 2019 report, you'll recall that Elon laid pipe and Tesla took a rocket to the rings of Uranus. That $3,000 turned into $120,000 in one shot. Coming off of gains like that, Hurley had finally discovered the secret to abundance and joy, buying FDs on meme stocks during earnings in volatile markets. Using that modus operandi, Hurley dicked around between February and March, riding out the COVID crash with surprising tenacity as his naked puts kept his portfolio gliding through Tendytown as the world burned around him. He even withdrew an undefined 6-digit figure and blew it on hookers, Kush, and a big donation to the IRS. As things softened in April and J-Pow and the boys kicked on the printers, Hurley took on his second big YOLO. On April 21st, Facebook was trading for around $170, but Hurley believed that all the quarantine folks scrolling through Facebook and IG influencers shilling beauty cream for the last 2 months meant the company was worth a lot more. Hurley dropped 39 Gs into Facebook calls expiring the next month in anticipation of strong earnings. On Webull, for some reason. On April 29th, Zuck took the mic and announced dank gains at Facebook Incorporated, adding 100 million more users to its platform and an 18% increase in year-over-year revenue as people around the world shared their Animal Crossing progress with their old high school acquaintances. In response, Facebook stock rallied and Hurley's position compounded to $230,000, a gain of $190,000 in 1 week. He considered selling, but the big man clearly got bit by the WSB bug. As his IQ dropped, his determination to hold naked options grew. Within a month, Hurley was back at it again, this time throwing $52,690 into 50% out of the money calls on Slack, ticker WORK, expiring in June and July. Within weeks, his position ballooned once more, again to $250,000, as Slack picked up the slack in production during the telework heyday. All told, Hurley was in control of an $800,000 portfolio, and he was eyeing that $1 million mark. Like a coked-out rock star, he was feeling invincible. And that's when he started dying. Hardened by the trials of market warfare and just one fresh trade away from his 7-figure goal, Hurley grew impatient with $250,000 gains. With unparalleled determination, the madman took his next YOLO to a new level. Instead of dropping a traditional $25,000 to $50,000 on a play, Hurley yeeted $300,000 back into Slack, banking on more upside. His DD? His friends like Slack more than they like Microsoft Teams. But unfortunately for him, Slack went into somewhat of a slump in the late summer as the economy reopened and employees returned to the office. The value of those calls melted away into nothingness. Hurley never considered closing early because he ain't no bitch, so that entire $300,000 went to shit. Strike one. With still a $500,000 portfolio and the determination to hit that $1 million mark unbroken, Hurley went right back to it. He stepped up to the plate and bet $200,000 against Papa Elon in July by purchasing out-of-the-money Tesla puts, a total rookie move. Buying puts on Tesla in late summer 2020 was a room-temperature IQ decision. Within a month, those 200 bands got scorched by Elon's rocket as Tesla burned its way to pre-split heights of over $2,500 a share. Another 200 Gs out the window. Strike two. After losing a meager $50,000 at a time on some ticky-tacky plays, undiscouraged, Hurley came in hot and sweaty with yet another YOLO attempt in late summer, turning back to Slack once again to carry him to early retirement. In late August, the beast dropped his last $94,000 into, once again, out-of-the-money Slack calls expiring earnings day of September 11th, expecting strong EPS to send Slack higher. At one point, His calls had almost tripled in value, and by September 2nd, Hurley was back to about $382,000 between two accounts. But having anything less than $1 million wouldn't cut it. The champ was determined to hold through earnings. When September 11th came around, it was an absolute disaster. Slack beat the street's consensus, but underperformed the whisper number, and for that, the stock got completely worked over, plummeting 14% in one day. That $382,000 burned down faster than Atlanta 1864. The common folk urged Hurley to sell while there was still something left to salvage, but his hands were made of diamonds, and diamond don't crack. Our heroic trader rode his Slack calls into the ground, walking out with barely a morsel above $5,500 to his name. Defeated but not destroyed, the big man promised to one day rise from the grave like a phoenix and reclaim his title. From $800 to $800,000, back down to $5,500. If one thing is for sure, Hurley 53017 is truly one of us. Best of luck keeping that girlfriend, Hurley. And now, let's get to the moment we waited for, our freshest trader of the reopening. I want you all to think back to the year 2 BC, also known as 2018, and how different Tesla was as the company struggled to find its footing. Papa Elon admitted that Tesla had nearly gone bankrupt. His boys set up a tent outside the factory to live like scrubs as they ramped up production. Tesla's assembly lines were so strained that Musk slept on the factory floor. I don't even know how that helped. And Elon's favorite pastime was smoking weed with Joe Rogan, which doesn't sound that bad, unless you're also sleeping on the floor of a factory. Haters piled into the anti-Tesla train, even going as far as to take drone footage of the factory to trash its inferior production speed. But where the common dipshit saw an abject failure of a company, the realest folks in the room saw tremendous opportunity. Our freshest trader is a mysterious figure by the name of Elon Ethereum, who appears to have created a Reddit account specifically to showcase the audacity of his trade. And with a name like Elon Ethereum, his stock of choice will be no surprise. While the communists collectively laughed at Tesla, Elon Ethereum began closely following the company at the fundamental level. By spring and summer 2019, our man was satisfied that Tesla would not only meet its production goals, but in fact change the face of the car industry forever. Our man was ready to dive in dick first, and throughout the summer, Elon Ethereum spent just over $24,000 to buy 87 pre-split calls at the $690 strike, expiring in January 2021. At the time, Tesla was trading for about $200, so these calls were almost 250% out of the money. Those calls had about a year and a half until expiration, but were so far out of the money that they were still trading dirt cheap. Tesla had never reached such dramatic heights before. Casual observers thought him a fool. But the mad scientist started looking smart when Papa Elon and the boys got their shit together, and Tesla enjoyed its first moonshot in February 2020, reaching a pre-split high of over $900. Within the 24-hour span of February 3rd and 4th, our man cashed out $387,000 by selling just a handful of calls. Although he had already multiplied his initial investment more than 15 times over, it wasn't nearly enough. We all know where Tesla went next. After a minor and oddly temporary corona-induced crash in late February and March, Tesla commenced its epic climb to over $2,000, a mighty journey that made many a fanboy rich enough to afford a garage full of Tesla Model Ys and VIP parties with Justine and Tallulah. The Big Shots post was a bit difficult to dissect, but if we pick apart the 2 seconds of footage between 2 minutes 7 and 2 minutes 8, we can see Elon Ethereum taking modest gains as Tesla arduously marched past its splitting crest when the stock underwent a 5-to-1 split. On a pre-split basis, Tesla stock capped out at $2,512.45. All the while, our hero took dank gains of at least $1,150,000, maxing out the Robinhood withdrawal limit of $50,000 a day no less than 23 times. Additional cash-out parties were reinvested into shares, giving our man $1 million share position in addition to his multi-million-dollar bank account and heavy options portfolio. After his moderate selling spree, Eazy-E still held about 30% of his original Tesla call position, with 153 split-adjusted calls in his portfolio. That over $1 million withdrawal was nothing but chump change. By the time Elon Ethereum posted on WallStreetBets, his calls were valued at a combined $4.14 million, pushing his total portfolio to over $5.8 million of lithium-induced Elon-powered freshness. His Majesty could cash out, pay his taxes, buy shares of dividend ETFs, and live off of 200 G's a year for the rest of his life. But this is Wall Street Bets. A surgeon's salary ain't shit when you're making gains like Elon Ethereum. Homeboy plans on holding the line until Teslas make up 50% of cars on the road. And because I'm sure you're all wondering, if he still had his original 87 pre-split leaps, they'd have converted to 435 post-split leaps with a combined total value of over $11,500,000 at the time of this writing. But do you think Elon Ethereum sold too soon? Come try and say something to this fresh new millionaire, whom I am honored to crown the freshest trader of Wall Street Bets.
Who wants to be king?
Thanks for watching, everyone. I hope you all enjoyed the shit show. Be sure to subscribe so you don't miss 1 minute of the action. This type of video is going to become more frequent. I would certainly be happy to have you as part of the club. Have a great week, everyone, and I'll catch you next time.